Today we're going to be talking about coinsurance agreement or coinsurance requirements in relation to homeowners insurance. Hope you enjoy. Do you have replacement cost coverage on your homeowners insurance? Sometimes people think they do, but in reality they don't. There's a coinsurance requirement, or some companies call it a coinsurance agreement, in your typical homeowner's policy that requires that the insured always maintain a certain percentage of the home's replacement value. It's very common to see an 80% coinsurance agreement or requirement, but sometimes you'll even see 90 or even 100, but 80 is the most common. What that coinsurance requirement says is, if you have a claim on that property, and at any given time when a claim occurs, you're not insuring it to at least 80% of the value, assuming 80% is the requirement that your contract has, then you go into what's called a cost share. And that can be troubling to somebody that says, well, hey, I had replacement costs, or I thought I had replacement costs. So to give you an example of how that works, just for round numbers, to make it easier for me to do the math. So if you had a home that was valued at $1 million and you had an 80% coinsurance requirement, meaning in order for replacement costs to operate on partial losses, you would always carry at least $800,000 of coverage. And let's say you had a $100,000 loss, and at that time, you only had $700,000 of coverage on the home, but $800,000 was the coinsurance requirement. What the insurance carrier has the ability to do, contractually they have the right to do, is they cost share, and they say, okay, you didn't insure at the proper value, so you were only insuring at 87.5% of the required value, so we're going to share the claim with you. In other words, the insurance company is going to pay 87.5% of that claim, and they're going to leave you with 12.5% to pay out of your pocket. So if you had that $100,000 claim, well, now you got $12,500 you've got to pay out of your pocket, plus your deductible. There's always some kind of property deductible. I say always. Typically, there's a property deductible that's going to get added onto that. So that can be troubling to somebody that has what they thought was replacement cost, only to find out come claim time that that provision in the contract is going to cause them to be involved in a cost sharing arrangement. Understanding this helps somebody understand why it's so important to make sure that your home stays insured at its proper value, besides the fact that it's, for many of us, one of our biggest assets, and we want to protect that asset and protect the value. The other thing is, from a claims perspective, we don't want to get caught in a position where we have to cost share the claim with the insurance company because that coinsurance agreement wasn't met. So if you have questions about this or anything else related to commercial insurance, personal lines, anything along that line, please don't hesitate to call Terry or myself here at Westside Advisors and Insurance Services. I hope you have a great week.